Hey, Odie's on Finance community. First of all, I want to thank you for joining us for this live event on the CARES Act. I know it's in the middle of the day. Things are a little bit different. Everyone's home, so hopefully everyone has a chance to watch this. It's a time of great uncertainty and a lot of fear. So just want to remind you guys that Odie's on Finance, we're here for you. We're here to help you in every aspect of finance related to optometry, related to running your practice. And just a few quick announcements before we get started. First of all, make sure to check out our website. We've got a plethora of resources on everything related to this crisis, including guides on the CARES Act, unemployment, student loans, practice management, telehealth, and investing. So take a look at all those articles that are on there. Also, make sure to follow our Instagram. Julie just put up an awesome step-by-step video on how to apply for the EIG, and she actually narrates it and goes through line by line how to do it. I actually used it myself when I applied yesterday. So definitely go on there, follow the Instagram, and check that out. So without further ado, I'd like to introduce our guest today, Adam Cmejla. And since 2007, Adam Cmejla has helped individuals and practice owners make educated and informed personal and professional financial decisions. Being a third-generation business owner, the husband of an optometrist, and a certified financial planner, this gives him a unique perspective that separates him and his firm from other advisory firms. He's regularly published in optometry publications such as Review of Optometric Business, and was named to Investopedia's top 100 financial advisors in 2019. His practice is located in Carmel, Indiana, and he and his wife, Andrea, have two daughters, Brooklyn and Courtney. Today, he's going to be talking about the CARES Act and also taking all your questions. So Adam, take it away.
Thank you, Aaron. Thank you, everybody, for taking time. I'd usually say out of your busy schedules, but I know that is a very interesting way to describe things, just given the current state of personal and professional lives right now. I'll give the disclaimer that I think we are all in a situation of doing. If you hear or see a 5-year-old running around behind me or something like that, you know, we're adjusting to this new normal right now. So what I wanted to do, again, appreciate the opportunity and the privilege of sharing this information with you all. My goal as a CFP has always been to just help provide as much education and information as I can to help ODs make those decisions on their own. We're not really necessarily on their own if they need to on their own, but also to equip them with questions that they can possibly take back to their own team as well. I think there's a big difference between having information and then figuring out how that information relates to you. And that's where we go. That's where we go from information to knowledge. And so my goal in this conversation with the Q&A that comes in is to take the information that we've learned about in the CARES Act and translate that into knowledge for ODs. And then either individually, if you're, so to speak, riding solo without an advisory team, or between you and your advisors, figure out what type of action plan you can take. And that's really where you have the wisdom to act on that knowledge. So, you know, what I think we'll just kind of do is we'll go through just kind of rapid fire. I told Aaron, it's like I warmed up with some client calls this morning. I had some conversations. I was hammering the phones and on the Facebook group yesterday, kind of warming up and flexing a little bit for this conversation. So let's just kind of go ahead and go through some questions as they're coming up here, and we'll just kind of start going. So first one that comes up here, Aaron, do you want me to read them, or are they reading them on the wall here?
Yeah, go ahead and read them out loud, just so everyone's familiar with what question you're answering.
So the first one here, my wife, who is a mental health therapist and works as a 1099, she works at schools, but all the schools are shut down. So she would be able to apply for the emergency 10K loan, and it would be forgiven. Oop, that scrolls up. Those questions kind of get away from me a little bit, because it would pay the salary she would be making where she's no longer employed and works as a 1099. So yes, the key there is that you're self-employed, right? So W-2 wage earners are basically, I don't want to say exempt, but not included. I guess it's the same thing. But the definition within the act is very liberal, very generous as far as who qualifies. So as a 1099, if answer that question, yes. If she's yes, then you can go in and apply for that grant. Now, the thing that we're still, I guess, and before I get into this question a little bit more, let me back up and give a disclaimer as well. I am not an attorney. I'm a CFP, right? Part of that does include, you know, estate planning and that type of training, but I'm not an attorney by trade. I've spent the better part of this overall weekend reading the act, pretty much from cover to cover, and reading the language and interpreting it, as well as just in my experience working with clients and their personal and professional situations. This legislation tapped in at, I believe it was about 400 pages of PDF text. There's a difference between passing legislation and enacting legislation. So the legislation as it's written right now, we're all working through this. I've been on the phone with bankers all day yesterday, over the weekend as well. Everybody's digesting this. And so the thing to know about this is we are still, yes, in the information gathering stages, but number one, things that are even acted upon today are not going to be even able to be exercised for a couple of weeks, right? We've talked about it. I know a big thing that's going to come up is the PPP, right? Paycheck Protection Program. The earliest that we anticipate someone being able to apply for that, and I'd be honestly amazed, excited, and surprised if this would happen, would be the end of this week. Most people are anticipating it's probably going to be a couple of weeks before we can even apply for the Paycheck Protection Program. So there's sometimes I joke with people that an architect's dream is an engineer's nightmare, and that's part of what we're kind of looking at with a piece of legislation like this that injects $2 trillion into our economy. It's law, yes, but we're still trying to figure out how to implement it and how to execute on it. So with that, with a couple of those disclaimers being made and things like that, I'll do my best to answer everything in the context of today's conversation. So back to the question. As the definition of that states, as long as you're a 1099, then yes, you're going to be able to apply for that. However, one of the things that you also have to apply in that is the income, right? Your net income. So from a self-employed individual's perspective as a 1099, net income is gross receipts minus attributable expenses to you as a self-employed individual. And there's where you're going to get your net income using that calculation. One of the things that they ask you for when you apply for that EIDL loan is what were your gross receipts, right? What was your top line revenue? And so it's not necessarily explicitly clear as I've been able to understand as to how much of that loan that you're going to get, right? I did mine over the weekend as well, submitted for the loan. I have yet to hear back of that application process. So bottom line, yes, submit for it. The $10,000, if it's granted, yes, that is forgiven, no questions asked. And yes, it would pay for the salary she would be making were she no longer employed. So bottom line, yes, go ahead and apply for it. Are you taking questions about the PP or PP? I see a lot of people saying PPL. I guess Paycheck Protection Program, Paycheck Protection Loan. Let's just, if we say one of those things, we're talking about the same thing.
Yeah.
Yep. Yes, we are talking about that.
Sounds good.
Next question. I am a sole proprietor, Schedule C filer. It seems like there is funding for my overhead, but is there anything that might cover any of my lost income? Yes, that goes back to my question about, well, as the definition states right now, your self-employment income is going to be, I guess the first question I would ask this person, as I'm a going back to the question, I'm a sole proprietor, Schedule C filer. It seems like there's funding for my overhead, but is there anything that might cover any of my lost income? The first question I would ask is, are you referencing the PPP, right? The Paycheck Protection Program? Can I just say P cubed? Let's just say P cubed because that's easier to say than PPP.
Yeah, let's say P cubed.
So,
that's a lot easier.
So if we're talking about P cubed, then the only thing that figures into that equation is 2.5 times the average earnings on a monthly basis, right? So take your average wages on a monthly basis, times it by 2.5, or 10 million, the lesser of those two numbers, and that's the amount that you're going to get. There's nothing in there that talks about expenses as far as how much you're going to get for the loan. The expenses come into play when we determine how much of that loan is going to be forgiven on or after June 30th or after that 60-day window that you elect closes. So that would be my first question. I'm going to assume that you're talking about the EIDL program. Well, I'll answer both ways. That way you have the information. PPP doesn't include anything on expenses. 2.5 times your net earnings. So again, back to what I said, gross receipts minus your expenses, net income. That times 2.5 is going to give how much you get through P cubed. EIDL is going to be go through the application process, put in your income, your gross receipts in that, and then from there go through the application process to determine how much you'll get if you're approved, if you are approved, or even if you're not, you can get that $10,000 loan, if you will. But in essence, it becomes a grant. That's what I would suggest in that situation. I've heard different things from different people. Yeah, that's a common theme lately. I own my own practice as corporation. Good, thank you for that. Our office is closed with the exception for emergency care. Is it legal and advisable to apply for unemployment? So Yes, short answer is it legal and advisable to apply for unemployment? Yes, to the extent that people are unemployed. Now, the trick with unemployment is that every single state runs their unemployment different. The federal rules that came out, right, there's a number, there are basically 4 or 5, depending on how you count, big things that apply or that came into play with the federal government stepping in and subsidizing states. Everybody in unemployment, regardless of what state you're in, anybody claiming unemployment is going to get an extra $600 on top of whatever the state gave you, and that will continue for a period of 4 months. They also extended the unemployment period by basically another quarter, 13 weeks. And then the other thing, and this may be what you were talking about, if you're, with the exception of emergency care, if you're calling in team members to fill in a part-time basis, check with your state to see if they have basically, like, I guess the best thing I could say would be like gap insurance, I think it's technically called in the unemployment. It's talking about short-term compensation. Basically, it will make your employees whole from what they were making to what they're now getting paid from obviously reduced hours. They can go through the unemployment process and potentially apply for that gap coverage in their income. So all of this, again, I go back to, this is still new. Every state's unemployment department and Department of Workforce Development is figuring out how to roll this out. So now if you're talking about people that you have truly laid off, yes, let them know to file for unemployment. This will, again, and I'm sure we'll probably get a couple of questions on this, so I want to make sure that we address all questions before we come back to it. There's an interesting quagmire that can develop with practices when you look at a practice owner trying to figure out how much of their P cubed is going to be forgiven and meeting the requirements, which are basically have to have the same head count, and you have to not cut anybody's earnings by more than 25%. And then on the other hand, you may have individuals that are actually potentially making more on unemployment than they were working for the practice. We'll talk about that interesting quagmire if we have time at the end here. But for people that you have let go, yes, you can have them file for unemployment. I don't see any reason that you wouldn't be able to do that. Next question, limited liability partnership without W-2 or 1099. Husband and I are the ODs, so classic partnership. You file a 1065 as your tax return. We take draws. Will we be able to use this when figuring payroll for the 7A? Absolutely. That goes back to that self-employed income, technically a 1065 partnership, very similar to Schedule C income. Obviously comes through in your K-1 a little bit differently, but yes, you're going to go back and figure out your income as it relates to the partnership. That's going to be the number in addition to, right, your team members, obviously add them in, making sure that you keep that limitation on only $100,000 or less. So what I would recommend doing it for those ODs on the call, and maybe this will answer some questions as well, remember, if we're talking about the P cubed, go back and calculate the average monthly wages paid by the practice, exclude yourself if you're over $100,000. If you're paying yourself out of the practice over $100,000, exclude yourself from that calculation. Once you have that number, and again, that includes retirement plan contributions, the match that the practice makes on the 401k, right? That includes the match on the practice. That includes healthcare costs that you've added on top of that, or that you pay for the practice if you carry a group health plan. If you've paid vacation to those individuals, that vacation, paid time off, sick leave, does play into that equation. So if you go back and they took time off in 2019, vacation, right, that's included, that's all included in figuring out that wage calculation. Figure out all that for all your team members on an average monthly basis, and then add $8,333. That's the $100,000 divided by 12. That's your 8333. That's the number that you can add on top of that. Take that number, multiply it by 2.5, and there's your bogey. That's going to be that's the nut that you're looking at on the P cubed. So yeah, back up to that. The partnership with the 1065, yes, your draws can absolutely be figured into that equation. Hi, Aaron, where can we type in questions? Is that just on the wall there of the live group, Aaron?
Skip to the one right below that. Yeah, that's on the wall. So the next one, it should say, I think my biggest fear is applying for the 7A.
Okay. Aaron, can you hear me okay? You were a little choppy on that end. Is my internet going good for you?
Yeah, you're okay. Yeah.
You can hear me good? Sorry.
Yeah.
Okay.
Yeah, can you hear me?
All right. How do you convince employees, especially part-time, that might be making more on unemployment than yeah, that was one of the questions there. These questions are going quick.
Yeah, we were getting quite a few.
Are you, sorry, Aaron, I don't mean to cut off time here, or are you taking questions off the
Nope.
feed there as I answer them?
Nope. They come in a scroll. So just keep scrolling down.
Okay, I thought it looked like they were disappearing a little bit there.
We are getting quite a few. So that's.
If all employees, geez, I can't even read them before. They're disappearing before I can. For private practice, if you have furloughed workers and you rehire them back, are you still eligible for P cubed? There we go. For P cubed, if you have furloughed workers and you rehire them back, are you still eligible for P cubed? However, the dates say 8 weeks from loan acceptance for the forgiveness part of the loan, but the period stated is February 15th through June 30th. Can the 8 weeks be June 30th through August 30th? No, it cannot. If you accept the loan on June 30th or the latest forgiveness period is the 8 weeks ending June 30th, yes. So the latest 8-week period that you can choose is going to be June 30th through May 1st. Or yeah, May 1st through June 30th. So basically your head count needs to be what it was prior to letting people go, right? And there's a window there, right? There's the window that began on February 15th and goes basically until, I believe I typed in a comment post, it was April 26th. You have basically that window where anybody that you let go in that window, you can go ahead and hire them back in that time period to have them count towards your head count. So you do have the option to select which 30-day window you're going to have, and then B, you do have time to hire them back. The quagmire that's created though is you have the issue of people may not want to come back to work because part-time people are potentially making more on unemployment than they were working for you. That is an interesting, again, it was impossible for legislators to figure out how to navigate everything in this situation. I don't have a solution for you. The only thing that I've told clients in talking with them is that it's a conversation with two things I think are going to happen. Number one, the byproduct fallout that's going to happen from this, one of my favorite phrases even before this is that necessity is a mother of innovation. And so we as business owners, myself included, have been forced to make changes, innovate on a dime. And so you as a practice owner are going to have to answer the question, are there things, do I actually need those individuals in the practice? Can you make do with others? If you do determine that you need that person, then it's going to be a heart-to-heart conversation with them that you don't want them, like, let's not cut off our nose to spite our face. So, okay, yes, you may be eligible for unemployment, but that's really only obviously a very short-term situation. With the fallout that may happen from this, we don't know what the unemployment is going to be looking like. We don't know what practice owners are going to look like. I would be having the conversations with our team that says your job is safe with us. We can't make any, obviously they're not going to know what's out there. So that's going to be a personal decision that they're going to have to make as to whether or not it's, the juice is worth the squeeze for them to risk possibly having a job to come back to while staying on unemployment. Here's the other thing that I would emphasize as it relates to the PPL, and because I had this conversation a lot with ODs as well, is that let's run the scenario, because the biggest concern that people have with P cubed is that, oh, what happens if I get this loan and then not all of it is forgiven because my head count isn't the same? Well, the metric that you use to figure that out is basically the quotient from the number of people that you now have at the end versus what you had in the beginning. So if you had 11, you lost 1, now you're at 10, right? 10 into 11, that's basically the percentage that you're going to use to determine how much of your loan is going to be forgiven. So if you look at the financial health of your practice, let's use rough math from an example. Let's say that a practice gets a P cubed for 100 grand, and they have 85, they end up with an 85% ratio at the end. They lost one team member, back to my example previously. So now 85,000 out of that $100,000 is going to be forgiven, no questions asked. If you think about it this way, would you or would you not take a $15,000 loan at 4% interest for 10 years to get $85,000 free from the federal government? Like, that's a pretty easy question to answer. So if you need to keep the loan, the worst thing that's going to happen is that you might have in my example there, a $15,000 loan for 10 years at 4% interest. To get that loan, you got $85,000 from the federal government to help you float the boat during the situation that we're in. That's quote unquote worst case scenario. Best case scenario in my example there, let's say you get to that point, you have cash reserves, whatever that may be, and you have 15 grand sitting in your checking account, pay the loan back. pay the SBA back. You maybe paid interest on that for a period of 60 days, maybe 90 days by the time all is said and done, and you dot the I's and cross the T's and the dust settles. So an even better situation, you pay 90 days of interest on $15,000 to get an $85,000 check from the government. I say that I know everybody's here. We're trying to maximize our dollars. We're all about being penny wise, but I'd also want us to be pound wise as well. So let's make sure that we're thinking about this in a big picture. I know that my little monologue there probably put me 30 questions in the queue there, but
it's okay. Hey, what I'm gonna do from now on, I'm gonna actually put them on the stream, so you should be able to see that question right there. Yeah, that way.
Thank you. Yeah, because I was reading and like they're scrolling, and I'd lose the question. And
yeah.
All right. Regarding P Cubed, I have had 4 employees and one of them quit 317. Would I need to hire someone else to keep the same headcount to receive forgiveness? If I didn't hire someone else, is part of it unforgiven or the entire amount will? I'm going to reiterate the last part of my little monologue there to answer your second question. Yes, if you didn't rehire someone else, is part of it unforgivable? Yes, it's unforgivable in the sense that you'll have to pay it back. To your point, you have 2 different windows to choose from as to headcount, right? You can look at the same period back in 2019, or you can look at headcount from 1/1 through 2/15. Basically, what you're talking about there, it looks like you did have someone quit during that period, so your headcount would be less. It's not going to be perfect, right? Not everybody's going to be able to put that round peg in a round hole.
Okay. Man, here's your next question.
All right, for P Cubed, it says the covered period is from February 15th to June 30th on the Senate's website, as well as every other search result in Google. However, when I read the House bill this morning, it states covered periods. Yes, make sure that you are reading the correct bill. That is an incorrect, the House's bill is incorrect. It states covered periods from March 1st to December 31st. Did the rest of the question is cut off there? I don't know if I'm assuming
did this covered period for P Cubed forgiveness changed? Yeah.
Yes, the cover period did change. So the cover period is February 15th through June 30th. So Aaron, what I'll do is I'll send you a link to the actual bill, the one that was signed by President Trump. And if you want to paste that in the in the page, we can, because there are a number of different iterations of the bill circling around out there.
Okay, great. We'll do that.
Is the purpose of P Cubed to try and give owners ability to pay employees for 2.5 months so you don't lay them off? Yes, not necessarily pay employees, right? There's a lot that you can do with that. The 2.5 months of payroll is just what Congress and the government came up and figuring out how much you're able to get. You're able to use that amount for payroll costs, rent. Notice it's not mortgage payments, so you cannot, quote unquote, build equity with this. So the amount that's forgiven is only interest on a mortgage incurred. So it's not, you can't use it to advance pay or prepay mortgage payments on a building that you own. Only the interest that you pay on a mortgage is going to be taken into consideration for the forgivable amount. But back to the list, right? Payroll costs, rent, utilities, and utilities is broad, right? Electric, gas, internet, phone, etc. Group health insurance premiums and other healthcare costs. And again, interest on any other debt that was incurred before February 15th. So for those of you that may have an OCT, Optos, you built out a lane, right? The interest that you're accruing on that debt can be taken into calculation for how much is forgiven, right? How much you get is based off of 2.5 times payroll. How much is forgiven is making sure that you're coloring inside the lines of that criteria, making sure that you're meeting the 2 criteria, right? Headcount's the same, and you haven't reduced someone's pay. You haven't reduced payroll by more than 25% for any individual. I am a part-time fill-in OD. In one practice, I'm employed. In the other practice, I'm independent contractor. What should I do? If you're an independent contractor, pass go, collect $200. So I would go and begin that application process for the EIDL. Again, the application process doesn't mean that everything's going to be approved. This still does require underwriting, but they've obviously stripped away a lot of that underwriting process. They've expedited it. The language in the bill specifically says that decisions can be made simply based off a credit score. So yes, I would go in and, I'd rather you apply and not get it than not apply when you might have been able to get it. I'm a co-owner of a 48 employee. I'm a co-owner of a 48 employee practice. Good for you. If we furlough, let's say 35 of them starting this Monday, am I essentially missing the boat on any loan forgiveness through PPP? No, you are not. I mean, due to timing. I feel pinched for time, and it would be, the rest of it's cut off, Aaron.
Risky to keep paying full staff. Yeah.
Yep, good question.
Risky to keep paying full staff.
Okay, so back to, no, you did not miss the boat on forgiveness. So let me make, if we furlough, say 35 of them starting this Monday, am I essentially missing the boat on any forgiveness? No, technically what you could do is you could furlough them on Monday and then bring them back within 30 days, or now within 28 days, basically, to make your head count whole for that payroll in order to have the totality of that loan, or as much of the loan forgiven as possible. But you do have a window of opportunity here where you could tell them to file for unemployment for 3 weeks, have them get their unemployment benefit. Again, every state's unemployment office is inundated. Indiana's crashed a number, it's crashing daily here. I'm sure everybody else is in the same boat, but you could have them apply for unemployment right now, get their wages, and then bring them back on as long as they're back on payroll. And you don't have to wait about timing. It's not like you have to have them back and have, there's nothing in the act that says must prove that, you'll have to prove it when you go to ask for forgiveness after June 30th. That's where they'll ask for your quarterly 941s and payroll summaries and things like that. As long as they're on payroll earning within 30 days after this act passed, you should be good to go.
And here's your next one.
Okay, if an employee you let, I think it's
supposed to say let go.
Oh yeah,
It should say let go. Yeah.
What if an employee you let go doesn't want to come back? Can you just have the same number of employees, or do they have to be the same employees you laid off? Interesting question. It is not clear. And so all it says is headcount. The act says nothing about hiring. Interestingly enough, the act does not say anything about what happens if you hire more people. So because I've had practices that have said, well, I'm in the middle of hiring. What if I bring on an associate during this time and my headcount grows? My interpretation, and here again, I'm not an attorney, we're all interpreting this as we go right now. My interpretation is that adding headcount will not affect your ability to have the loan forgiven, and here's why. Part of the language in the act specifically said equal to, but no more than. So if you do that divisor, right, if you do that equation and you have, instead of 1, if you have 10 and you added to 11, now you're at 1.1, someone might say, well, I applied for 100 grand times 1.1, so now I should be able to get $110,000 of debt forgiven. The act specifically says you cannot have any more forgiven, which leads me to believe, my non-JD interpretation of this is that you should be able to add people to your team if you're in that situation of doing it, and not have it count against you. You'll be able to have 100% of that forgiven, but you can add different people as long as the head count is at least the same. If I'm a single member LLC with no employees, can I apply for PQ for my lost income as a doc owner? Oh, P cubed. I'm like PQ. Yes, P cubed. We're saying Paycheck Protection Program, P to the third, right? P cubed. That's what we're talking about. When I say P cubed, it's just hard to say PPP or triple P. So P cubed. Can I apply for P cubed for my lost income as a doc owner? Yes, but I would also suggest applying for the EIDL loan as well. Remember, these are two independent loan programs. You cannot use funds from both programs to pay for the same expenses in your practice, but you can apply for both different funding options. I said this in the beginning, but we've probably had people come on since we hit record or since we went live. You can't even apply for P cubed right now. You can't even apply for the Paycheck Protection Program yet. Our estimates from what I've been talking with lenders and those in the banking industry that have been around for quite some time is that it's probably going to be a couple of weeks before we're even able to begin the application process. Hopefully it will be expedited as far as releasing those funds. So I would absolutely recommend going to and Julie did a phenomenal write-up on that. Click on the link that's on the ODs on Finance Facebook page there. Go ahead, click on that link. It takes you right to the COVID-19 EIDL application program. I think I did mine last night. It took me 5 minutes. It does not take long to submit the application for the EIDL. I would do that and the P cubed when that application does become available. The head count. Can you rehire a full-time person back as part-time and have it still count? You can have it count towards the head count, but if you cut their salary by more than 25%, now that person no longer counts. Are we able to report to unemployment those that you offer for them to come back and don't, relating to earning more on UI? Are we able to report to unemployment insurance those that you offer for them to come back and don't, related to earning more on unemployment? Oh, okay. That's a good question. I think this is the first time that I've had to say, really, I don't know. I try and answer as many questions as I can. I don't know. I would check with your state Department of Workforce Development. I think what we're talking about here is, people freeloading and just saying, I don't want to work. I just want to collect unemployment. Right. I know practice owners that leaves a salty taste in our mouth just because we know how hard it is to start a practice and work in the practice.
Yeah.
So I don't know how to answer that one. I apologize.
Okay.
My CPA, any forgiveness from P-cubed would be subject to income tax. That is false. Your CPA respectfully is incorrect. That was one of the best parts of the Paycheck Protection Program of Triple P. Triple P is easier than P-cubed, let's just say that. Is that it specifically says non-recourse, non-taxable, forgiven debt. So it is not subject to income tax. Are these loans guaranteed? No. Well, let me rephrase. Are these loans, let's clarify these loans. The EIDL loans up to $200,000 are you do not have to have a personal guarantee attached to that. Anything over $200,000 based off the underwriting, the federal government can come back and ask for potentially 20% of that to be collateralized, or not really collateralized, but I want to be clear. You don't have to collateralize that. You don't have to assign equipment or your life insurance policy or something like that to it, but you do have to personally guarantee potentially 20% of the amounts over $200,000. On the P-cubed, no, that does not have any personally, on a triple P, that does not have to be personally guaranteed. I have an S Corp and my husband and I are ODs. We've closed our office except for emergencies, common. We have a W-2 and Schedule K-1. We also had, that was S Corp. Okay. We also have a doctor that works for us as an independent contractor for the triple P calculations. Is it what we pay ourselves? And then Aaron, finish the rest.
Yeah, and they're asking about the IC. Do they include that into the triple P calculations?
As far as what they pay their independent contractor, right. That's not wages. So if they have an independent contractor, that's double dipping. In the essence that the independent contractor would be applying, and they would be applying. It's clear that it's wages. So you're not paying for that independent contractor. They're the ones that that's going to go and apply. It's 6 one, half a dozen the other. The funds are going to be dispersed, but you can't double dip in that sense. But make sure that you apply based off obviously your W-2 income. Are 1099s eligible for sick leave under the Families First Corona Relief Act? What are eligible expenses with the 10K advance via EIDL for 1099s? Are eligible for the sick leave under FFRA? Yes, they are. What are eligible expenses with the 10K advance via EIDL? It's basically the same things and even a little bit more expanded for the P-cubed. Just know, again, what I said earlier is that if you apply for the EIDL and the triple Ps, you can't use the funds that you can't pay your rent and say that you're paying your rent with both of those funds and then pocket the rest. You have to make sure that you're accounting for your expenses separately with both of those funds. Is there any advantages for the employee be furloughed versus completely laid off? Will they be eligible for unemployment either way? Will I still be eligible for P-cubed if they file for unemployment? So not necessarily. I mean, again, the unemployment regulations were loosened both at the state and federal level. Again, I'll punt unemployment questions somewhat to your state because every state is interpreting the language not only from CARES, but also they're reinventing their own language. So check with your state's Department of Workforce Development website. I will say we serve clients in 23 states. The states' websites that I've been to for clients have been very, very transparent with their language, and they're doing the best they can with what they have right now. Will they be eligible for unemployment either way? Yes. Will I still be eligible for triple P if they file for unemployment? Yes, you will, as long as, again, I'll go back to that headcount rule. As long as they're hired back and your headcount is the same within the window now as it is at the end of that 60-day period, whichever 60-day period that you elect. As long as the headcount's the same, payroll hasn't been reduced by more than 25% for any individual employee, you should be good to go.
Okay, great.
I have 2 entities, one that owns the practice and the other that owns real estate, plaza that has no employees. Is there an SBA program or any program to help this entity since now most of the tenants cannot make rent? Very good question. So let me bring up, and again, I'm on 2 monitors here, full disclosure. I am not without my own set of notes as well, just because I want to answer that question specifically for the EIDL. So basically, here are the funds for the EIDL need to be used for these 5 reasons: providing paid sick, and this is verbatim directly from the Act. So the EIDL loans need to be 1, providing paid sick leave to employees unable to work due to the direct effect of COVID-19. 2, maintaining payroll to retain employees during business disruptions or substantial slowdowns. 3, meeting increased costs to obtain materials unavailable from the applicant's original source, the supply chain issues, right? 4, making rent or mortgage payments. 5, repaying obligations that cannot be met due to revenue losses. So based off your question, I think you're good to go based off of the 4th and 5th reason there. So one that owns a practice, one that owns real estate, apply for both of them through each of the entities, because each entity has its own respective debts and obligations that need to be paid. Please confirm if I qualify for the 10,000. If I qualify for the 10,000 EIG grant and also the Triple P, I'm reading that I can use both programs if they are used for different purposes. Correct. That's absolutely correct. Was there anything, a different payroll for different, and then it cuts off, Aaron? Was there anything after that?
Yeah, I have lost the question, so
okay,
it's disappeared in the feed. I think that
bottom
was
line,
the
yes,
gist
for
of the
different
question
purposes.
from what I saw.
Yep. Okay.
Yeah. All right, let me give you another one here.
If you have a mortgage but you pay yourself rent, would this qualify as rent?
That's kind of
yes,
related to the last question that you had.
Yep. As long as it's fair market value for rent, yes, that is correct. It's interesting. Let me just kind of opine on that briefly, just because. Okay. Going back to like a lot of doctor-owned real estate out there that you have, the Act doesn't, and I was surprised that this wasn't discussed in the Act, but the Act doesn't say anything about owner-occupied real estate where you house your business inside of the rent. So the way I interpret that is it's a free and clear opportunity. If your practice, right, if you're applying for Triple P through the practice, and you as a landlord charge your practice rent, which you obviously do, that rent that the practice pays and is paid for from Triple P can be used to pay your rent, which you're paying to yourself. So there was nothing in there that explicitly, there were no exceptions, considerations, exemptions for owner-occupied real estate. So you should be good to go. Can you repeat what you said about Aptos OCT? What I was talking about there is that if you have, as long as the debt that you incurred on those assets, if you have debt on those assets, as long as the debt was incurred prior to February 15th, the interest that you're paying on that debt for the purchase of an Aptos, OCT, camera, whatever it may be, can be used and written off through the Triple P program. Is profit sharing considered payroll cost? Interesting question. It was not explicitly clear. I don't believe so, because it is a discretionary expense. You're not mandated to make a profit sharing calculation. This is actually one of the things that I'm waiting for guidance on, and that we're relying on SBA to clarify. So it was a very good question. I've had other people ask that. I don't know yet. I'm leaning more towards no, but I've certainly been proven wrong in the past. What are your thoughts on the $350 billion? I'm assuming that the cap for small business relief in the CARES Act. Is there a disincentive to wait to apply until we know more about when we will be back to work? Is the possibility of the program running out of money a real thing? 350 billion is a lot, right? To put that into context, right? I wrote in my blog post that was on our website that 1 trillion seconds is like 31,000 years. So 350 billion is an incredible amount of money. So is it possible that it could run out? Yes, I guess it is. Is there a disincentive to wait to apply until we know more about when we will be back to work? I would apply. It kind of comes back to this. I'd rather you have the loan and not need it than need it and not have it. There's no prepayment penalties on this. On the EIDL loan, it's 3.75%, right? 3.75% for up to a 30-year loan. That's unheard of from a commercial financing standpoint. And if it's less than $200,000, you don't have to personally guarantee anything. So worst case scenario, you apply for it, you get the best case scenario, you apply for the loan, you get the $10,000 in free money, basically, as in the form of a grant as an advance, which is going to be paid within 3 days. you get through all this and you realize you didn't need the loan, then just pay it back.
And here's your next one.
Yes. Sorry, I didn't read the question.
And here's the next one.
that was an easy. So the question was, sorry, that was disingenuous of the question. Can we apply for the EIDL and triple P while on unemployment? Yes, you can. Again, preface to the triple P, you can't even apply for it yet. We don't even have the link. We don't have the portal. We don't have anything on that. Lenders are still trying to figure out and not really figure out, but well, interpret the act and then build the infrastructure to facilitate the flow of funds from SBA to each individual applicant. So yes, you can apply. You can only apply for one right now. We're just still gathering information on triple P. If we take a few weeks to apply and receive funds, what if I hire my staff back and not get approved for the money? So I'm assuming we're talking about the EIDL, but I'll answer it as if we're talking about both of them. So if it takes and receive the funds, what if I hire my staff back? Well, we're talking about staff back, so I'm assuming that we're talking about the triple P right there, and do not get approved. There is really no approval process for the triple P program. That is basically going to be, as long as you substantiate with payroll, like you're going to have to gather a lot of data. You're going to have to gather your 941s. You're going to have to gather your payroll numbers to substantiate the fact that you actually did have payroll. But once you provide that, there is really no application process. You're going to be able to get the access to the funds. There was nothing in there that talked about any type of underwriting. In fact, it was explicitly clear in the legislation that the SBA has direct authorization to grant these in the most seamless way possible. Paraphrasing, not the obvious language, but it was explicitly written that the underwriting is very minimal. It's kind of one of those, like, seriously, this is that easy to get almost pretty much free money? Yes, it is.
Right. Yeah.
If I have an optometry practice, S corporation, and optometry consulting company, SP, I'm assuming sole proprietor, can I apply twice? Yes, you can. So there was nothing in there that explicitly said it was nothing in there said it's limited to one taxpayer. When you apply for the loan, you have to put in your EIN number, not necessarily your social security. Well, you have to put in your social security number as well, but you have to put in your EIN number. So assuming that you have obviously an EIN for your S corp and you're using your social as your sole proprietorship, I would go through that process for both. Can I still get my payroll tax credit if I have kept everyone on board in March using the EIDL 10K for payroll in April and then triple P for payroll in May and June? So I'm assuming we're talking, now we're switching gears a little bit and we're talking about the employee retention credits. I'm going to assume that we're talking about the...
I think that's what they're referring to. Yeah.
Okay, so the key with the employee retention, with the payroll tax credit, is that you have to have at least, which most, I don't want to, you have to have at least one quarter with at least a 50% drop in revenue compared to the same quarter in 2019. If you qualify, then you're able to claim that a new credit against payroll taxes equivalent to either to 50% of wages, again, going back, including cost of healthcare, paid to each employee up to a max credit of $10,000 of wages per person, not $10,000 in credit, but $10,000 of wages per person. So yes, there's ways in which you can use employees to qualify for multiple things as we're interpreting the law right now. But you have to make sure that your practice compared to the same quarter last year experienced a 50% or more decline in revenue.
All right, let me send you over another one.
Okay. What's the difference between EIDL 10,000 versus up to $200,000? If I applied for the 10K express loan, what do I apply for next? EIDL for another 990 or move to applying in triple P for other expenses? Okay. The act of applying for the EIDL does take somewhat of an underwriting process. So when you apply for that EIDL loan, there's a box right there that says, yes, I'd like to be considered for a $10,000 grant, which again will be provided to you within 3 business days. You have to provide your bank account information when you go ahead and file for that. Then as far as up to $200,000, it's going to be based upon underwriting needs of the practice, right? And that's where getting your lender involved in that process is gonna help you through that process. So it's not really cut and dry as far as how much you're going to get, the 200,000, the 290. It's just a matter of the first step that you have to take is go online, approve, get your case number, get your application number, and then wait to hear back from SBA as they go through the application process. And then or move to applying in Triple P for any other expenses payroll. Yes, I would still, when we know about Triple P and how to apply for that, I would absolutely go and apply. But here's the thing, most practices, when you look at what they're going, like, even if we go through the application process on the EIDL just to get the $10,000, and then you go through the Triple P and get all of that forgiven, you're going to incur enough expenses. Most ODs are going to incur enough expenses in their practice to use both of those funds. So I would absolutely, I can't think of a situation where an OD would not apply. As a practice owner, I can't think of a situation where you would not apply for Triple P when it's available. My wife and I are ODs and have an S Corp. One of us is 51% shareholder, the other is 49. Does it matter who applies for EIL or Triple P? Also, does it make sense for one of us or both of us to apply for unemployment for the month of March? And what's the rest of it, Aaron?
And part of April, the rest of it is part of April, and then use the EIL and PPP for an 8-week period after.
Yes, I would go ahead and do that. I would apply for unemployment. That again, applying for unemployment will take some time. The federal government has backstopped states as far as funding. It doesn't matter which one of you applies for it. It's based off an EIN number. So no, I don't see, nothing in the language said who owns what. It does ask when you apply how much of the company that you own. Now I own 100% of my company, so candidly, I don't know what happens if I were to put 51. It may ask, candidly, Aaron, I'm not sure. Have you heard of anybody that has said what happens if there's multiple shareholders?
I have not. No,
okay.
I've only heard of 100% owners. So, but if I do find info on that, I'll definitely post it on the group.
Yeah, when you apply, it does ask for how much do you own of the company. If you do put 51, it may ask you to list the other shareholders and then just fill it in there appropriately. I wonder who got the 51 and who got the 49. I wonder how that conversation went.
I know, right?
Sorry. If an employee is on FMLA, I know, right? If an employee is on FMLA, do they still count in the employment headcount for Triple P? No, good question, and let me clarify this. So I'm assuming when we talk about FMLA, we're talking about the Families First extension to the FMLA program.
Yeah.
Yes, that person counts for headcount, but you cannot include the amount in wages that you're paying them for FMLA in the calculation for how much of your Triple P loan is forgiven. And the reason for that is because you're double dipping, because you're getting an offset for what you're paying in FMLA wages by offsetting your payroll taxes, which, side note, payroll taxes for 2020, right? You have the option of paying 50% in 2021 and 50% by 12/31/2022. So there is some relief there as far as when you make your quarterly payroll tax payments as a business. But you have to be careful that you're not double counting the payroll that you're making. The FMLA pay cannot be included. That dollar amount cannot be included in the calculation for your Triple P forgiveness.
And we've gotten quite a few questions related to this one. They keep disappearing in the feed, so I'm going to catch this one.
Okay. If an OD has two jobs, an independent contractor and an employee, can they apply on their own for any funds? Or if they were an independent contractor last year and now an employee, what could they apply for? That is a good question. If an employee has two jobs, an independent contractor and an employee, so you can't really do anything as an employee. The only thing that you're really going to be able to do as an employee is, do you qualify for the $1,200 or $2,400 or $500 per kid based off of the 2018's or possibly 2019's tax returns? But as an independent contractor, yes, you can apply for those wages. If they were an independent contractor last year and now an employee, what could they apply for? Nothing. If you're a W-2, trying to think if there's, I mean, you're a W-2 employee right now, so I don't see how you'd be able to apply for anything I'm assuming we're talking about the wonder if we're talking about the EIDL or if we're talking about the triple P there. Yeah, I'm sorry. I
or
don't.
even unemployment. I'm not sure.
Yeah, unemployment. Okay. The unemployment. The answer is yes. I mean, unemployment was expanded to include self-employed individuals.
Okay. And the next one's just a clarification question.
So for triple P loan forgiveness, employees making more than $100,000 per year, are they totally exempt, or is it just anything above the first $100,000? It's the latter. So anything above the first $100,000 doesn't count. You still include assuming you're talking about you or any associate that you have, basically you're going to take $8,333. That's that's 100,000 divided by 12. That's the number that you're going to use. I haven't been able to find out under what circumstances the $10,000 EIDL grant would be forgiven. All that I read states may not been to be paid back. Any info? Yeah, actually, let me go ahead. Let's see here. I can go, you know what, I'll come back to that. There is, I can pull the language directly from the bill here as far as where it talks about that being forgiven.
Okay. All right, I'll shoot you the next question while you're looking at that.
All right. All right, if I'm a sole proprietor, can I add myself on payroll now? I do have 4 employees on payroll, but I just had Schedule C for myself. No, as a Schedule C, you can't put yourself on payroll. You don't have the ability as a Schedule C individual. If you're a sole proprietor, you file a Schedule C, by definition, you can't put yourself on payroll. You really don't have that ability to do that. So you're gonna take your, when you think about it, it's kind of 6 one, half a dozen the other, right? If you have a $100,000 practice, you have $25,000 of expenses, and then you have 75, and then which would make $75,000 of net income. If you pay yourself a $75,000 salary, now you have 100,000 in wages, 100,000 in expenses, 0 net income. It's 6 one, half a dozen the other. So you really can't pay yourself a W-2 wage. Same as partners, right? If there's anybody, I answered a question like this in the beginning. If there's anybody that are members of LLPs right here, right, limited liability partnerships, that file a 1065 return, and you basically get partnership draws. You file, you get a K1. You don't get a W-2. You just take partnership draws. Same difference. You qualify, you figure in your partnership draws. It's the average of, right, the average monthly draw for yourself. So that's what you're going to use in that equation. At what point you said you have to bring furloughed staff back before 30 days after the act passed, but then later said that it's the end of the 60-day period you choose. So you have to, good question. There's a 30-day window that exists from February 15th through 30 days after this act passed that you have to bring team members back. You then get the opportunity to pick which 60 days you're going to take into consideration for paying things back, or for having basically the expenses incurred in that 60-day window not to exceed June 30th to determine what's going to qualify as free money, basically, 100% forgivable. But your head count needs to be the same no more than 30 days after the passage of the act as it is by June 30th. If 401k is top heavy, mandatory contribution is required. Does that count towards mandatory payroll on PPP? Yes, it does. Assuming it does not exceed $100,000. Or assuming that any 401k, like you have to take that 401k top heavy contribution into consideration when figuring out that $100,000, right? It's not $100,000 of wages and then add on 401k contributions. It's $100,000 capped. Whatever makes up that 100 grand is what makes it up. As an independent contractor, 1099 at 2 different practices, which would be best for me to apply for? EIDL or PPP, and is it a separate application for both sources of income? I'd apply for both. Again, we don't have the application process for triple P right now. And yes, it will be a separate application. The only application that exists right now is for the EIDL. We don't have the opportunity, or we don't have the application process for triple P yet. I have 2 associates that make over 100K. Can I still use their wages up to 100K in calculating towards the triple P? Yes, you can. It's 100K per person or per employee. Okay. I have an LLC. Yep, I have an LLC taxed as a partnership. So again, you file a 1065, 2 owners, neither on payroll, again, but taking draws as desired. Expenses are pretty low as service only. How would we maximize benefits with EIDL and PPP? So apply for the EIDL. Again, that's going to be an underwriting process to determine how much you're going to get that $10,000 grant, et cetera. Triple P, again, you're going to go back in that straightforward calculation. The calculation of how much you're going to get, how can you maximize the benefits from the Triple P, take the 2 owners draws, average out what the monthly draws are, combine for the 2 of you, multiply it by 2.5, there's your nut. What if an employee under Triple P is off due to having COVID and applies for disability? Oh, that's a good curveball. 56 minutes in.
That's a good question. Yeah.
So sandbag me with that one. What if an employee under Triple P is off due to having COVID and applies for disability? Well, let's think through that. If they're off having COVID, that means that they would be eligible for. If an employee, then they'd be eligible for being covered under the Emergency Paid Sick Leave Act, which is going to be at 14 days of paid leave, not to exceed $511 per day. Again, you're going to pay that, and then you're going to offset the cost of that against your normal practices payroll taxes, the 7.65 that the employer pays in payroll taxes, and applies for disability. I keep going back and asking myself the question: are they an employee at the time? If they're on disability, I don't know. That's a very unique situation. I hate not giving answers here and not being clear. The first part is they'd be eligible for the Paid Sick Leave Act, but if they're on disability, if they're not an employee, then I would hesitate to say that they would. Or I'm hesitantly going to say that they would not be included in that calculation, but I'm sorry, I can't give any more clarity on that one. I think that's only 2 that I've really been stumped on here so far, but that was a good one.
You're doing pretty good so far.
Could I use the EIDL 10,000 to pay our lab bill from after February 15th? So again, I'll go back to providing paid sick leave, maintaining payroll, meeting increased costs, making rent or mortgage payments, repaying obligations that cannot be met due to revenue losses. So I would see a lab bill as you not being able to meet obligations that cannot be met due to revenue losses. So yes, you could use the EIDL 10 grand to pay that back.
And here is a related question to that.
Okay. And just kind of a blanket statement on that, it's what I'm finding that, or it's what we're talking to a lot of practice owners about, using the funds that they're going to get from EIDLs to pay, or from the EIDL loan to pay lab bills, inventory, inventory, cost of goods, frames that they had ordered before all this went out, and now the bills are coming due. They're using the funds from that to pay for it, because those expenses, you cannot use Triple P funds when we have those available. You cannot use those funds to pay for your cost of goods, lab bills, et cetera, et cetera. So yes, use the EIDL funds to pay for that. So to this question, I was planning on expanding the office with some remodel and equipment purchases. The loan rate for the EIDL is better than what I had been quoted recently, and I really like the idea of no payments for 6 months or possibly 12 months, don't we all, right? Is it possible to put some of the, and I'm assuming the question is some of the capital that, or some of the funds that I'd received from the EIDL towards a home improvement?
Exactly.
This is where you might invoke the phrase "beg for forgiveness before ask for permission." I'm taking the language verbatim directly out of the act. Repaying obligations that cannot be met due to revenue losses. If you're not able to pay for the cost of, like, if you already had capital.
Let me rephrase this way. Nothing in the bill suggested.
Up.
Aaron,
Adam, you still there?
I think I lost for some.
Yeah, I think we lost a little bit. You're coming back.
Okay?
Coming back. Try talking again.
Oh, okay. There we go.
Yeah, I can hear you now. Your video is lagging a little bit.
Now?
Okay, I think of it. Yeah.
Okay. All right. Not sure what happened
there.
Yeah,
good.
All right. Just through my train of thought here. Oh, there was nothing in the bill that said anything about capital improvements in those five things. So I guess proceed at your own risk. At the end of the day, but I was talking to an advisor, not to opine and get off track too much here. It's $2 trillion in a 400-page bill. There's going to be so much fraud that's going to be. I'm not saying you're going to commit fraud in doing this, but there's just so much latitude in how these are going to be used that it's going to be difficult to enforce all this. I'm obviously not telling anybody on this call to act in a fraudulent, malicious, or non-ethical way. I know none of us would do that. We're sincerely here asking really good questions. Having said that, though, just from a common sense and a smell test point of view, I just don't know how, how that's going to work. So proceed at your own risk. Can you still hear me okay, Aaron? I want to make sure that audio and internet is still good.
Yep. Yeah, I can still hear you.
Okay.
Yeah, you're coming in clear.
Is the EIDL grant tax? No, it is not.
Okay.
Another question on profit sharing is August 2019 profit sharing contributions. August 2019 profit sharing contribution considered part of calculation for total loan amount of PPP that can be borrowed. Not sure what August 2019 has to do with it. I'm assuming maybe you just made the payroll. Well, that doesn't make sense. You wouldn't make payroll. You wouldn't make a profit sharing contribution in August. Maybe it's. I'm getting hung up on the August part. Short answer, regardless whether it's August, I don't know about profit sharing. That's something that we're still trying to get clarity on. My goal is for all of these to pay the tax that they owe, but not a dollar more, right? We don't want to pay. We don't want to leave the IRS a tip. So from that filter, please know that I want every OD on this call to maximize what they can get from this bill. Having said that, if I dance on the other side from a conservative nature, the profit sharing is a completely elective contribution from the owner's perspective. So I don't know. We don't have clarity. Nothing. It said retirement plan contributions. It didn't say what type of retirement plans, and it didn't explicitly exclude profit sharing. This is one of the things that I'm hoping we can get guidance on from Treasury and or SBA within 30 days, both of which have to give guidance on this act within 30 days. So stay tuned. I guess shameless plug here. Subscribe to our newsletter, and when we know, I'll send our newsletter. I'm sure Aaron and Dad and Julie will also provide guidance between one of our two platforms. We'll let you know as soon as we know. Click.
Definitely. Okay. Yeah, we're coming up on 60 minutes, so I'm just going to shoot you a couple more questions, and we'll wrap it up.
I'm good. Yeah, I'm good. Do we have a lot that we didn't get to yet? Do you have a ballpark as to how many there are?
We got quite a few, but they just keep coming in. So
it's one of those things I don't think we'll ever get through them all. Right? We'll go. I mean, I'm good for going about another 10 minutes.
It's it. 10 minutes. Okay. Yeah, let's do a few more questions then. Okay.
All right. I was working part-time as W-2 at a private practice and part-time as 1099 independent contractor. I established a professional limited liability company, S Corp, for which 1099 is paid towards, and then I pay myself. Makes sense. What is recommended? Can I apply for EIDL? Yes, you can. So go in, apply for that. The W-2 wages portion does, like, I think the poster is asking about, like, how do my wages that I pay myself for my own S Corp figure into this equation? That will figure into the equation when you get to the point of applying for the PPP. But as far as EIDL, yeah, go ahead and apply for that now. Just know that you're only applying for your S Corp, for your W-2, for your S corporation. You're not going to get anything, obviously, as the employee of the other practice. Assuming it's not your own practice. Repayment obligations translates to paying providers with outstanding bills. Just to confirm, it is forgivable. Repayment obligations translates to paying providers with outstanding bills. Just to confirm, it is forgivable. Make sure that we're talking about the same thing. The EIDL is not forgivable. That is an SBA loan at 3.75% for an amortization schedule up to 30 years. $10,000 of which can be advanced and treated as basically a tax-free forgivable grant right now. But anything above and beyond that you take out to use, and this is why I think it's, when you say paying providers, I guess that is, I mean, you're talking about paying ODs in the practice with outstanding bills. If you're talking about paying providers, paying your ODs in the practice, thoughts, Aaron? Am I interpreting that correctly? You know, paying providers.
Yeah, I'm not sure. The outstanding bills, that might be vendors, is what they meant. That's the only thing I could think of.
You cannot use the PPP funds to pay your vendors, to pay your bills. Or you use it to pay your bills. You cannot use it to pay your vendors. The bills are going to be utilities, rent, payroll, interest on debt. Basically, remember those four things, and that's what you have. The EIDL is what you could use to pay your lab fees, frames, lenses, cost of goods, basically.
Okay.
As an owner, how do I actually take advantage of Sick Leave Act if an employee gets COVID? Meaning, how do I make sure that the tax credit is being taken advantage of? Stay tuned. We're still waiting on guidance from Treasury as far as how you're going to be able to actually capitalize, or not capitalize, but get reimbursed from that. How do I actually take advantage of Sick Leave Act? So what you're going to do, this is where we internally and a number of practice owners use Gusto as their payroll provider. I know a lot of practices use QuickBooks as well. All payroll providers are scrambling, trying to figure out how to quite literally account for this as well. My recommendation to every OD practice owner on the call: keep copious notes, keep copious spreadsheets, account for things that you're paying out. And my sister's a CPA. Obviously, we work with a lot of CPAs around the country as well. My heart goes out to them. Like, it goes out to them every year, but especially this next year. So keep copious notes. The Sick Leave Act, right, is going to be anything that you pay out in sick leave is going to be credited against any type of 7.65% employer payroll tax that that is paid. To the extent that the sick leave that you're paying exceeds the quarterly payment that the practice has to make, that's where that refundable credit comes into play. And we're waiting to hear from the IRS as to just logistically how they're going to get that money above and beyond your payroll credit back to you. Can ordinary business income passed through S Corp be counted in addition to W-2 wages? No. Toward the $100,000 triple P limit for owner. No, it's defined as wages. So if you're taking wages as an individual, there was nothing in there that referenced any type of pass-through income.
All right, let me see here. I've got one question actually from Julie. Let me just ask it to you. I can't. There's too many questions on the feed right now. Can the owner apply for triple P and include the 1099 OD wages if the 1099 OD chooses not to apply for triple P EEIG themselves?
Good question, Julie. So what I was doing is so here's directly from the bill. Let's see. It's vague. And I hesitate because the term payroll costs, reading directly from the bill here, the sum of payments of any compensation with respect to employees that is a salary, wage, commission, payment of cash tip or equivalent, payment of vacation, parental, medical, family, or sick leave, allowance for dismissal or separation, payment required for the provisions of group healthcare benefits, including insurance premiums, payment of any retirement plan benefit, or payment of state or local tax assessed on the compensation of employees. So make sure that you include your state and local taxes. The sum of payments of any compensation to or income of a sole proprietor or independent contractor that is a wage, commission, income, net earnings from self-employment or similar compensation, and that is in an amount that is not more than $100,000 in 1 year as prorated to the covered period. So when we read that, the sum of payments of any compensation to or income of a sole proprietor. So any compensation to a sole proprietor or independent contractor leads me to believe that, yes, you could include someone. The way that I'm interpreting that is that you kind of do get the opportunity to, both people are able to potentially apply for this. This is one of the things that I would anticipate we're going to get additional guidance of, because it doesn't pass the smell test, right? It doesn't pass the smell test because it's listed that the sum of payments of any compensation to or income of a sole proprietor or independent contractor. So we think of both people on the opposite ends of the equation. You as a practice owner are paying an independent contractor. If we figure you into that equation, you're counting it, and then they're thinking about it and saying, well, I'm a sole proprietor and I have net earnings from self-employment because this practice owner over here pays me, and so I have net employment. It reads as if you'd be able to double dip. This is one of the things that we may potentially get clarity on. And again, we're not going to be able to even apply for this for probably 2 to 3 weeks. And the The process of actually getting it forgiven is not even going to be applicable for, until after June 30th.
Okay. And I've got two last questions here. They're both kind of clarification questions, so I'm just going to shoot them on here.
Okay. Can those 8 weeks of PPP loan forgiveness be non-consecutive? So perhaps 2 could be. Doesn't say anything in there about consecutive. So, my feeling is that yes, it should be consecutive, but again, that's my own personal interpretation of it. There's nothing in there. Let me check real quick. That is a good question. I have the act. I have that section of the act pulled up here. Let me go to the forgiveness section here real quick. Entrepreneurial development. It's weird. I've looked at this thing so much, I know exactly what page things are on now. There we go. Loan forgiveness. The term expected forgiveness. Timing. Calculation of average. Okay. So reduction based off reduction. The average number of full-time equivalent beginning. No, that was the wrong part. Sorry. I know looking for answers here. Let me get to everything as quickly as I can. It doesn't say anything about consecutive, but it doesn't say anything about being able to gap it as well. I would probably lean on. Let me write that one down, and I'll post that because that is a good question. Make a note here on my scratch pad. Consecutive versus
good attention to detail over past that.
Yeah, check back on the Facebook group, and I'll answer a few of those. I'll put that as a Q&A and answer that to the best that I can.
Cool. And let's make this the last one.
All right. My practice is a professional corporation. It rents from my LLC. Can my LLC apply for EIDL since a practice in theory can't pay the rent? Yes, it can. Absolutely.
All right, great. Yeah, we're hitting right around 75 minutes, so I think we'll call it. Adam is on the group, so if you guys have questions, yeah, always ask him. And yeah, thanks so much, Adam, for coming on, answering a lot of these questions. We've hundreds of questions going through the group, going through the website, so I really appreciate taking the time. And just want to give you the floor for a couple minutes. Just tell us what's going on in your life, what you offer, your different services.
I appreciate that, Aaron. I've been connected with both you and Dat. Earlier in the year, we had some conversations. I've enjoyed the privilege and opportunity of being a supporter of ODs on Finance. Our firm, we are a fee-only financial planning firm, investment management firm located on the north side of Indianapolis. We serve clients, like I said, ODs and practices, and I think we're 22, 23 states. So we have the national reach. We're continuing to grow and support optometry. Like Aaron mentioned in the beginning, my wife's a practicing optometrist. I'm a third-generation business owner. And as a certified financial planner, those kind of 3 factors, I think, give me a very unique perspective and lens. I'll see what I did there. Way in which to look at and serve optometrists. There's a lot of parodies and in-plan words that you can do with personal finance and optometry, obviously, and preaching the choir here. So we are a full service wealth management firm that will handle everything for ODs, from personal and professional financial planning, retirement plans. Our whole focus is to help ODs understand how to make the best personal and professional decisions in their life. I'm not a practice management expert, so to speak. That's not what I hang my hat on. But having said that, I've worked with enough practices that I know where we can move the needle in practices, and then also connect the dots on what you do in your practice and how that influences what you do in the personal life, and vice versa. So our whole philosophy is planning life on purpose. We also help with retirement plans, the implementation, ongoing maintenance of retirement plans with practices as well. We also have a podcast. I'd really suggest, if you're interested in what we're talking about here, check out 2020 Money podcast. Wherever you get your podcasts, we're on Apple, Spotify, Stitcher, Google Play. Go ahead, download, subscribe to that. It's a weekly show. Comes out every Monday. Every Monday morning. I think we're 75 episodes in. It's everything personal finance, practice management related, financial planning related. Again, just to help you be the best OD as possible. One thing, and in closing, I'll end with this. We spent 75 minutes going through a very, very important piece of legislation. Some phenomenal questions that were being asked by ODs, obviously all wanting to do the right thing and maximize this. We all have a lot of time on our hands right now, but it's also important for everybody to remember that this is why you have a team. This is why you have your CPAs. This is why you have, hopefully you're working with a good CFP, with a good advisor, you're working with your attorneys. This, now more than ever, is when you should be leaning on them to get clarity to these questions as to how they apply to your situation. One of my most favorite phrases in business is who, not how. Realize where your best return on time is and delegate and team up with the best that can help you get from point A to point B in whatever aspect in your practice that you're working for. If you're interested in learning more about our firm, you can head to integratedpwm.com. Again, we have a link within ODs on Finance as well. You can follow me on LinkedIn. I'm pretty active on LinkedIn as well. Connect with us there. Subscribe to 2020 Money. And again, I appreciate everybody being on the show here today. And with that, Aaron, thank you again for the platform, and I'll turn it back over to you.
Yeah. Thanks again for being on. And to anyone here that wants to watch this again, we are going to make it into a YouTube video, also make it into our podcast. And I believe Adam's going to also take this content and put it on 2020 Money. So there's a variety of ways to check this out if you missed any part of it. And once again, hop on the website. Julie had a fantastic write-up on the CARES Act and also on unemployment. So if you need some follow-up resources, definitely jump on odsonfinance.com. Also jump on to Adam's website. He's got some great blogs on there regarding everything we talked about today. So with that being said, I think we're going to sign off. It has been about 80 minutes. All right. Thanks again, Adam.